So if you want to improve your trading, it's very important that you know how to identify the best price levels across all the time frames. And in this video, I will give you 7 tips and 7 tools on how to do that across all the time frames, and you will know by the end how to find the best price levels every single day. Let's get right into the charts, and the first thing you need to have on your charts is the daily high and the daily low. In TradingView, that's very simple. You simply search for daily high low, and then you will see that you will get this channel here across the price. The one at the top is the daily high, the other one is the daily low. And the daily high and low is used by a wide variety of traders and trading strategies. A lot of day traders use that. Also a lot of automated and algorithm strategies also use the daily and high and low. And therefore, the more people use it, the more effective it becomes. And you will often see that new trends emerge at a previous daily high and low, and new trends often start. And in the trend, you will often see that the market is paying attention to previous daily high and lows. And very often you will see that trends actually end at a previous daily high and low. And it's very commonly used also for a stop loss placement, and it's also often used for targets. And this is why you will see those very precise reactions, especially like here. You can see overall the market is range bound and just going sideways. And it's really bouncing nicely between the previous daily highs and lows. Obviously, sometimes it's overshooting it, but in general, you can very nicely see how effective the daily and high and low is. And that's why it's so important to have it on your charts. Ideally, you can use it also for targets. So if you find yourself in a trending market, always make sure that you check the daily high and low. And sometimes you will see very nice and precise reactions around them. So really can pay off to have them on your charts. Second, you need to have your daily pivot points on your charts. If you're a day trader, daily pivot points, and if you're a swing trader, we will cover the weekly pivot points as well in a moment. But the daily pivot points consist of your central pivot point. This is the central line here in red, it's just called P. And then you have pivot points above and below the central pivot point labeled R1, R2, S1, and S2. And you will very often see that those areas hold as support and resistance. You can see a strong trend is often ending the day on a previous pivot point. You can see also very often you will see complete reversals on a previous pivot point. And you can see when a pivot point is holding and the market is not able to push below it, you will often see that new trends emerge away from the pivot point. And where do they end? At another pivot point. So you can see that the market is really bouncing back and forth between those pivots. Pivot points are also great because they are a dynamic indicator. The pivot point will refresh every single day, and for every trading day you will get a new pivot point label on your charts because it always adjusts based on yesterday's price action. So the pivot point is not a static indicator, but it is a dynamic one and it adjusts automatically. And you can very nicely see how effective this is here by just looking at this snapshot. And if you're a swing trader, make sure that you change your pivot points to the weekly pivot points. Therefore, they will show you a little bit more the broader picture. They don't reset every single day, but they're going to reset every single week. So it's very important to have them on your charts, and you can very often see that the market is often trading around them. It's going back and forth, trends end, retests happen very commonly around the daily central pivot point. So it's a really, really important feature and a very important tool to have on your charts. So before we get into tip number 3, which is one of my favorite ways on how to find best levels, I just want to highlight our current special that we're offering. So I've been trading for around 14 years and I've put all of my trading strategies, how I trade, into a special course. And even better, you get 4 trading courses for the price of 1. So besides my trading strategies and how I trade currently, you'll also get a supply and demand course with even more videos, 23 videos, a lot of trade studies. You will get my multi-time frame strategy. And if you're new to trading, you will also get a Forex starter course. So if you are enjoying my YouTube videos, you're gonna love this because I will go much more in depth here. You can download the videos and you can watch them anytime. And if you want even more, you can also join our Forex mentoring group. Here you also get all of our trading courses, but you'll also be able to join our chat room. And we hold 5 to 6 live webinars every single week, and you'll be part of a great community with traders from all around the world. So tip number 3 is concerning round numbers, and round numbers are just so important psychological levels. There have been some studies even from broker data, and it really shows that a lot of traders use round numbers in their trading. Very often even the financial media is referring to round numbers, and many traders use them for their targets, for stop loss placements. And in TradingView, again, it's very simple. You just search for round number above and below, and then you can set it to something like that. And you will see those dotted lines at the round numbers, and you can see how accurate and how precise it is. I marked them here a little bit more bold for you. We have 119, 118.5, 118, 117.5, and 117. And you can see how perfect accurate the market is bouncing between those levels. So this is really a must-have on your charts. Also, tip number 4, long-term Fibonacci's. So what I like to do is that when I see on my higher time frame, this is the daily time frame, when I see that there has been a strong trend going on, I will connect the high and the low of the previous trend to get those Fibonacci retracements, and then I will use them in the future to find important support and resistance levels, and I will try to see where does it line up with price action. So here you can see, here is where we connected the high and the low, and then going forward you will get those Fibonacci levels, and you can very nicely see how the market is bouncing between those levels, and it's a very accurate tool. Fibonacci's are often used by automated trading strategies because they are very objective. They're also percentage based, so they're very clear, and there's no debate on where to find Fibonacci, so they work really exceptionally well. Tip number 5, you need to know about supply and demand zones. In fact, I made a complete video on supply and demand zones on my YouTube channel. Also, I have included a complete supply and demand course in the special that I just mentioned briefly, and you can very often see that once you find important supply and demand zones, then when the market is coming back, you will often see that the market is reacting again to those. So here is when the market has created the supply and demand area, the market is coming back, and you can see that it is reacting very nicely, and there's a good chance that the market is even further starting a new trend, because supply and demand zones are the origin of very strong impulsive trends, and therefore there's a lot of buying and selling interest in here. And you can very nicely see how here is where the demand zone was created, and then you have 1, 2, 3 reactions away from this demand level in the past, and you can see each time the market is really rallying higher, and sometimes starting a huge trend that lasted for days and hundreds of pips. So it's very important that you learn how to spot supply and demand zones. Again, I'm linking my course special in the video description and also in the comments, and I've also made a few free videos on YouTube here. But it's very important that you know about supply and demand zones. Tip number 5, we can obviously not miss classical support and resistance. When we look at our naked price action charts, you will see that it's very hard to make sense of what is going on, and everything looks a little bit random, and it's very hard to understand the price action. But looking for those horizontal levels where the price has previously shown a reaction immediately helps us to better understand the price movements, and we can very nicely see where the trends are ending, where are the trends starting, where has the market in the past shown a problem and reaction, and then we use this information in the future to make better trading decisions. Either look for trading opportunities away from those levels, maybe a break and retest, and we can also use them, of course, for our stop loss placement and targets. So it's very important that we know how to use it. Again, you can see without anything on your charts, it looks very empty, and it's very hard to understand what is going on. Everything looks super random, but just adding 2 levels above and 2 levels below the current price action can sometimes really improve already in the way you understand the price action, and that is very recommended. Every day I mark up my levels on my charts. I come back to my higher time frames every single day. This is the daily chart. That's where I draw my support and resistance levels, and then I will drop to my lower time frames to actually find trading opportunities when the market is coming near it. You can obviously then, once you're done on a daily chart, drop to maybe this is the 4 hour, you can go to the 1 hour, and then also draw in those intermediate support and resistance levels. Then you have a good mix between the high impact, higher time frame levels in bold from the daily, and the lower time frame levels as well. And we need to obviously also talk about trend lines. And a trend line is a diagonal line, very different from a horizontal line of classic support and resistance. And they're really a great add-on. So sometimes we will not be able to find the best support and resistance levels on our charts. And then we have another tool in our toolbox. So a trend line is, as the name suggests, a line that you will use to define a trend. And you can see when we connect the highs and the lows of the price action, we can often find those diagonal lines that really nicely describe the price action. And there are many ways how you can use it. You can use it to time your trades away from the trend line. You can also use it to look for breakouts when the trend line has been broken. Very often new trends are also created. You can see here was a trend line. The market is breaking below it, coming back to it, retesting it from underneath, and then trading lower into the previous trend line. So it's very nice to see. And if you can spot trend lines on your charts, they can often really help your understanding of price action. You will be able to also put the price and trends into channels, which you can then use going forward and trade away and trade along the outside boundaries of a trend line channel. So really a must-have tool in your arsenal. And obviously last but definitely not least, moving averages. And I use the daily period, 50 period moving average on my price action. And you can see this is the red line. And it comes from the daily time frame. It's the 50 period EMA. And you will often see that on the lower time frames, those reactions along the daily 50 are just so precise. And whether you use indices, Forex, stocks, commodities, any time frame and any market from all around the world, moving averages are often respected. Obviously, nothing works 100%, but this is a great tool to have besides everything else that we've discussed. And if you want to use moving average, I would really recommend that you stick to the commonly used ones, such as 50, 100, and 200 period moving average. Generally, the more people use a specific tool, the better it works, and therefore you want to stick to really the most commonly used, the big round numbers. Also, when it comes to moving averages, that is really something to have on your charts. And you can see that when, especially in a trending market, you can then use it to time your trades as a pullback, so with the trend rate away from the moving average. Or you can see often you also have those pullbacks. So the market is breaking below it, coming back into it, and then trading away. So really an important tool to have. So before I sign off, I really want to show you how to use and how to find the indicators. And I use TradingView. And here it's very simple. So let's start, for example, with the round numbers. And you go just to indicators, then this window pops up. You type in whatever you want to find, round numbers. And then the one I use for the video is this one, round numbers above and below. You click on it. Now you can see here in the top right, it's already in your left. It's already in your trading view. You can open the settings. And then you can choose how many of the lines you actually want to see on your charts. So here, let's just make it to 10. You can style it, you can turn it on and off, and then on which time frame you want to have it. And then you have it here on your charts. You can see when you scroll back, you will see all of those dotted lines on your charts. Obviously, you can switch to different time frames and they will stay. And that is how you have it. You can delete it, you can hide it on TradingView, and that's the first one. So I also use the daily pivot points, and here you just search for pivot point, and then here it is pivot point standard. And you can see now a lot of things have happened. So what I like to do first thing is open the settings. Under inputs, you can see we can choose traditional, Fibonacci, and a few other things. So we can just keep it at traditional. And on pivot point time frame, you can choose different ones: auto, daily, weekly, monthly, and so on. Let's keep it in auto. And here you can turn on and turn off the different levels. I don't use the ones S4 and S5. They are not as relevant for my trading. What I also like to do is just different color for the daily pivot point, so it really stands out nicely. And obviously you can change the colors if you want. And then that's it. You can see now you have pivot points on your charts, and again you can switch to any market, and then the pivot points will update automatically, and every single day you will get a new pivot point on your price action charts. I also mentioned I use a higher time frame moving average, so we go to indicators. We can just type in EMA and exponential moving average. We put it on our charts. So by default, it is the 9 period. And we can open the settings. We go to inputs and indicator time frame. We can change it to the day. and I set 50, so we have it here. I also like to just make it a little bit bigger and thicker, and you can see now we have the daily time frame moving average on our lower time frames. And if we go to the 1 hour, it's always going to stay the daily time frame moving average here. So it's a very nice way to actually get the higher time frame information into our lower time frame here with this nice setting from TradingView. And in the video, I also use the daily high and low. So you can go to indicator, we type in daily high, and then it should pop up. You can see there are a few different ones. Just a tip, what I usually like to do is I just go for the one that is the most used. So we click on it, it's activated here on our charts after a moment. When we scroll to the front, you should be able to see it. No, you're not. What you need to do? And you can see by default when we open the style, it is set to white. So we need to change that obviously. What you can do, daily high, we could, for example, make it green, make it a little bit thicker. The daily low, we can make it red and make it a little bit thicker as well. Turn it on, make it opacity, and now you have the daily high and low on your time frames, and you can see how nicely this behaves here on this market. And that's it. I hope you enjoyed this video. If you did, don't forget to leave a comment, leave a thumbs up, and also make sure to subscribe to our YouTube channel, and then I will be back with a new video very shortly.